And with AI Capex increasing more rapidly than anticipated, our next guest believes this trend will benefit the picks and shovels segment of the AI market. Let's bring in BNN's regular Ivana Delevska, founder and chief investment officer at Spear Invest. It's good to have you. Thanks so much.
Thanks for having me, Lindsay.
So I'm wondering, just to start off, do you think that the concerns regarding the capital expenditure results were overblown? We heard of a lot of big companies saying they're going to be, aggressively spending.
Well, I think the concerns around returns. We are seeing capex continue to expand at a much faster rate than we previously anticipated. So the question is going to come whether companies and consumers are seeing really the benefits of this spending. We think they are. The question is going to be, where do these returns actually accumulate? Is it on the consumer side? Is it on the company side? But we think the returns are there. And the more important point is the CapEx is getting spent no matter what. So we are seeing about $200 billion more CapEx spent than what we originally anticipated, which is basically going to flow directly through the picks and shovels.
And I want to get to the picks and shovels, but first, maybe it depends on what company we're talking about too, right? Like if you look at Google, for example, given their strong cloud business growth, do you think the increase in spending is justified?
So if you look at the mega caps overall, I think the increase is justified for each and every one of them. And the reason is because if you don't spend, you're going to fall behind. So if you actually look at the mega caps, the more the companies spend, the better their position. So Google was among the ones that increased CapEx the most, and we think they are one of the best positions. Similarly, on the other hand, Microsoft has been actually lagging a little bit in CapEx spending, and their business is coming under attack. So I think that really the way to look at long-term differentiation is going to be who has the long-term moat, which is really going to be created by who is spending the most.
What was interesting was Meta's stock rose after that company reported that it was going to be spending more. What do you think Meta is doing differently from some of these other bigger companies?
Well, the expectations from Meta were really low, right? So they really surprised to the downside last quarter, and it was really mostly expectations related. I think it's still a show me story. They do need to show equally as much as the other, as the hyperscalers do in terms of getting the returns on investment on this CapEx spend. But I think the expectations were much lower for Meta than for Amazon, Google, and Microsoft.
What about Nvidia when we're talking about higher spending, also factoring the potential for a memory chip shortage in that sector? Like, does that affect your investment, do you think, or your opinion of Nvidia?
Well, I think that companies that were seeing this boom coming were able to secure the supply of memory and other components to be able to meet demand. So we're not so concerned, especially in the near 1 to 2 year time frame in terms of component supply. I think basically the way to think about it is out of this earnings season, we got $200 billion more that are going to flow to Nvidia and the rest of the value chain. So really, Nvidia is going to capture the biggest dollar amount of that. But for some of the smaller players, in terms of percentages, they're going to be able to double or triple their revenue in a 2 to 3 year time frame. So really, I think the key is to look down the value chain.
Okay, so 2 to 3 years for some of those companies, because that was going to be my next question, right? Is like, how long do investors have to wait to see the results of some of this spending, and how long do companies have before people kind of lose their patience?
Well, the key is what exactly do you do, right? So if you sell picks and shovels, as in optical components, networking components, or any like memory, for example, you're seeing the benefits today. So you really don't need to be waiting, and you're really at the question there is more like, are you closer to the peak of the cycle or are you in the early innings? So I think this is where we're seeing the real-time returns. Now, a new area for us has been semi-cap equipment. These are companies that benefit from the companies spending on CapEx, so adding incremental capacity. So as we get further, you're going to need more memory capacity, more logic capacity. This cycle just began last year. So it's something new and something for investors to put on their radar.
So with that in mind, what companies do you think investors should be looking at with the picks and shovels aspect of this?
So on the picks and shovel side, optical components like coherent, they're benefiting real time. To my prior point on the semi-cap equipment, we really like LAM Research and KLA. Those are two companies that they're going to benefit from the Capex equipment cycle kicking in. So those are the two kind of main areas. We disclose all of our holdings on our website, but I would say within picks and shovels, one component is benefiting real time, one component the cycle is just inflecting. So you really want to get exposure to both of those components to get the best risk reward.
Okay, so two good picks there. If investors are kind of looking to make their own picks in terms of the picks and shovels area, what should they be looking at in companies to make their pick?
Well, I think the key is going to be to figure out where is your investment falling in the cycle, right? Is it an early cycle play on the chip design side, for example? We're already in year 3 of that, right? If it's a later cycle play on the semi-cap equipment, we're really in the early innings of that. So I think it's becoming increasingly important for people to understand the different sub-themes that are within AI. If you looked at this sector 2 years ago, everything was going up, right? Mega caps were going up, smaller caps were going up, everything was getting lifted by, like the tide rose all boats. Now we're seeing something very different, which is people are scrutinizing every company, and really the better investments are going to be the ones that are actually delivering the earnings growth and the returns on invested capital versus the ones that are just spending, but you need to wait longer to see the returns.
Mm-hmm. Okay, we will leave it there. We're out of time. Ivana Delevska, founder and chief investment officer at Spear Invest. So good to have you join us. Thanks so much.